Greetings, members, one and all of the Salivation Nation. Silver, so far, has seen the biggest monthly price drop in 9 years. Does this suggest that the market's love affair with it is over? Let's explore! This comes to us from BusinessInsider.com by Amanda Cooper. An interesting story here. And it talks about silver's volatility, and specifically here its drop. And silver has had a dazzling 2020, buoyed to multi-year highs by record amounts of cheap cash and a weak dollar. But as clouds gather on the economic horizon, investor passion for silver may be cooling, and the price is now lurching towards its biggest monthly fall in about 9 years. From August, a giddy 7.5-year high, to at nearly $30 an ounce, silver has lost almost a quarter of its value so far this month here in September, set for its biggest one-month drop since September 2011. When it fell by more than 27%. And keep in mind that was when it reached almost all-time highs, about $48 an ounce in 2011. Silver has profited from this year's rush into gold, which has touched record highs above $2,000 an ounce, as buyers sought alternatives to a weaker dollar, as well as protection against potential future shocks, whether those stem from COVID-19, geopolitics, or beyond. But silver has a solid track record of delivering nasty shocks, particularly to the uninitiated, thanks in part to its dual personality as both a precious and an industrial metal. And boy, that is so true, which makes it very difficult to really predict and to assess in that regard. Whereas gold this is stable because it is treasured, it is held, it is rarer. It is inherently more volatile than gold. Whatever gold does, silver doubles down or doubles up. Gold status as a safe haven asset means it tends to gain when investors are feeling anxious about the stability of global financial markets. But that then places it in a line of fire if equities endure a vicious sell-off, as has been the case this month, as the S&P has lost 8%, driven mainly by a decline in technology stocks, and gold has fallen below $1,900 an ounce to its lowest since July. If gold's on the back foot and the economic outlook is mournful, which means that both are doing fairly bad, then silver remembers it's actually an industrial metal and goes into a tantrum. That's right. This is the time when Dr. Jekyll and Mr. Hyde rear their ugly heads, one of them as a precious and the other as an industrial metal. And so then the Dr. Jekyll or the Hyde, whatever the bad one is, I forget which one it is. Well, that's the industrial aspect. It's going to suffer in that regard. So Rana O'Connell, who's the head of market analyst at EMEA and Asia at StoneX, makes a pretty good point. She continued, so the market's love affair was, as it should be, a serious flirtation that is now over, and silver has fallen out of love with itself. And really, that is the bottom line. It's kind of a silver is a commodity that is traded and in paper form with SLV, as the ETFs, exchange traded funds out there. Most of those people don't really hold the metal itself, and that is why they don't have a love affair for it. Now, keep in mind, really, it's not smart for any of us to get attached to our metals. For sure. I mean, we don't want to get so attached that we won't sell, kind of like what I do with my Silver Eagle that I hold in my pocket, the one that I have carried with me since 1990. No, that's not the kind of love affair we need. We don't want to be so emotionally attached to them unless you're a collector. However, if you need to sell, well, you sell. And you sell at a particular price. Now, when you take a look at what silver has done since March, it has performed dramatically well. That's in the paper markets. But for those of us who buy the physical, well, we haven't really seen that much of a difference. Premiums are still high. In fact, during this latest decline, some of the premiums have maintained, and some of the prices have only dropped slightly. So in other words, premium percentages have increased, while the spot price has dropped at a higher rate. And really, that's the bottom line. You have the paper markets and you have the physical markets. For those of us who hold these metals in our hand, we accumulate them not for the industrial aspect, but because of the precious attribution to the metal. And make no mistake, silver is a precious metal. But this may be one of those times where that big price jump that we saw, it never came to fruition to perform the way that many of us were hoping it would in due course. At least not yet. Could it still? Perhaps so. In fact, we see it time and time again. Gold goes up, silver tends to go up more. There are exceptions, and we've seen them even through this time. Gold will go down, and silver will slightly go up. But more often is the case, gold will go up, and silver may stay where it is or drop slightly. But the article here continues, economic data are showing that the recovery both in the U.S. and elsewhere is running out of steam, and a second wave of COVID-19 infections is threatening to act as an even greater drag on growth, which has sent investors back into the arms of the U.S. dollar. That's just it. Don't count the dollar out. And I know, yes, I know it is fiat. It is backed only by faith and what the government tells you. But that faith is something that every single stacker out there has here in the United States and even around the world, because it's the dollar that drives the economy, and we have faith in it. We earn it. We utilize it. We spend it. Now, every time we transfer those dollars for the precious metals themselves, well, that is a way to protect ourselves against what could be with the dollar. The dollar is a depreciating asset for sure. And so that is something to take into account, and which is why we hold precious metals. But we have enough faith in it that we use it. We have faith that the transfer of those dollars for these metals is what it is. So don't count it out. Silver, like most dollar-denominated commodities, tends to trade inversely to the U.S. currency, as weakness in the dollar makes it cheaper for overseas investors to buy those assets, while strength in the dollar has the opposite effect. The price of silver, which is used in electronics as well as jewelry, is still up 23% this year, making it 2020's top-performing commodity, followed by gold with a 20% gain. So you look at that. Look at the statistics very greatly here. So if they're taking into account where silver is now compared to where gold is now, that's something that we should all note. But that is only in the paper markets. Because again, as I mentioned in prior videos, how many of you were able to buy silver for anywhere near $12 an ounce back in March? Very few of you, if at all, were able to buy silver for that much. The premiums were so high, we never really could take advantage of it. However, it made most of the headway between March and early August. Silver has managed to log just 2 days in the black in September and has given up 40% of the gains made in that time. With losses since the start of the week amounting to just under 20%, silver almost finds itself in a bear market, Karsten Fritsch, a strategist at Commerce Bank, said. Retail and institutional investors alike appear to be giving silver the cold shoulder. Holdings in silver and exchange-traded funds have fallen by the biggest amount this month since December 2014, with an outflow of nearly 600 tons of metal, according to figures from Bloomberg. Quite aside from silver's volatility, the fourth quarter can often serve as a moment of reckoning for any asset that has been out or underperformed. Remember, we are entering the period where the commodity funds start looking at the new year rebalancing. Best performers, top slice, worst performers add weight, and silver's been a screamer this year, Stone X McConnell said. So she's not counting silver out, but when you take a look into the performance of silver versus gold, even by these measures here, silver should have done better. But make no mistake, in the physical markets, it really has. But it has not done as well as gold. I don't believe it has done as well as gold, and that's why this year and what's been going on with gold, and even through last year and before, is why I have kind of shifted. Although you're seeing a lot of silver unboxing lately, but most of that is because I'm accumulating pieces from my collection. But make no mistake, do I have faith in silver? Yes, I do. In the long term, I have enough of it that I can consider myself a stacker too, with what I've got. And so that being said, but I'm a long-term holder. How long will it take? Who knows? But it's the way you buy it as to how it's going to perform. More on that in another video for another time and another topic. Now, gold is a lot less risky in that area. And so that's why I have been accumulating, even at these high prices, because I feel that, in the long run, gold is going to probably do fairly well. And we are certainly in uncertain times as far as where the economy is going to go. That's at the best, when you can't take into account certain measures of the economy are doing very well, but other parts are not doing so well. And the debt and deficit are doing horribly. So those are things to keep in mind there. But so there you go. So the market, the love affair with silver may be over for some. It really isn't for me. I like it. You can have an emotional attachment to a collector piece that you have, but I like the metal in general. But a lot of that really isn't economical. It's just the beauty of the metal and how it can be shaped and how it can be struck, how it can be poured even. So there you have it. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.